Take a look at this sketch. You analyze the chart, place a perfectly calculated trade at a support line, and set your stop loss underneath. Then the price drops, clips your stop loss to kick you out of the trade, and immediately shoots right back up in your original direction. If you trade gold, you see this happen constantly. This specific pattern is not a streak of bad luck. Large financial institutions actively manipulate the market to engineer these exact scenarios. To counter this, we use a mechanical 3-step strategy optimized specifically for the 5-minute gold chart. By learning to identify the footprints of institutional manipulation, you can use the traps they set for other traders as your precise entry signals. Step 1 starts with setting up your workspace. Open your trading platform and select the 5-minute time frame on the gold chart. We use this time frame because it clearly highlights the intraday traps we need to identify. Scan the recent price history to locate distinct areas where the price aggressively exploded away, leaving a clear ceiling or floor on the chart. In this diagram, once you find the apex where the price dropped sharply, draw a box around that exact turning point. This box provides historical evidence, showing exactly where major buyers or sellers stepped in with enough volume to force a reversal. The ideal setup occurs when the market eventually starts moving sideways and drifts slowly back toward the box you just drew. You draw these zones to map out the upcoming battlefield. We are not trying to predict an exact reversal point. We are defining the specific physical boundaries where institutions are most likely to spring a trap. Step 2 requires strict discipline. As price approaches your boxed zone, do not enter a position. Getting in early is exactly what the institutions want you to do. Instead, you wait for a liquidity sweep. This means you sit on your hands and watch the price push slightly past your established zone. Look at this diagram. Average traders place stop losses directly above resistance, creating a pool of standing orders. Institutions push the price up to trigger these resting stop losses, absorbing the volume. You'll see candlesticks spike to erase those stops, immediately followed by an aggressive rejection downward. That deliberate spike and subsequent drop creates the fakeout. It catches impatient traders on the wrong side right before the real move happens. Recognizing this pattern and waiting for the sweep keeps you out of the trap. Stop acting as liquidity for the market and align your entries with the financial institutions. Now we move to step 3, the trigger. To find your precise entry, look closely at the minor pullback that occurred right before the liquidity sweep. In this diagram, draw a straight diagonal line across the minor swing points leading into your marked zone. Your requirement for entry is a structural break. You must see a massive, darkly shaded candlestick violently shatter back across this newly drawn trend line, proving strong volume. Once that large breakout candle officially closes, you execute your trade. Place your stop loss safely beyond the extreme wick of the recent liquidity sweep, putting it out of reach of further manipulation. For your take-profit target, scan down your chart and place it at the next major historical zone of support or resistance. Requiring a liquidity sweep and a violent structural break removes emotional guesswork. It provides hard visual proof that institutional momentum has reversed in your direction. Take a look at this final sketch to review the complete system. You box the historical zone, wait out the institutional sweep at the top, and pull the trigger on a confirmed trendline break, carrying the trade down to your target. Applying this exact sequence shields your capital from standard market traps. You only enter when the institutions reveal their hand. Open your charting platform, pull up the 5-minute gold chart, and find the last zone break. Walk through these 3 steps and backtest the setup for yourself. Once you understand how these stop hunts are engineered, you can stop taking losses at obvious resistance levels and start taking profits alongside the institutions.